My name's Chris Williams. I work at Green Insurance Group, and I've been an insurance broker now for some 38 years, dealing mainly now with commercial business. And I've been asked to talk about the duty of disclosure and the requirements of clients and policyholders. It's a pretty dry subject, I'm afraid, but very important within the requirements to make sure that insurance that you purchase and that is arranged for you is going to perform what it says in the contract of insurance. But above all, it's important to understand what the insurers expect of you and what the law expects you to do as a policyholder. What is the duty of disclosure is the question that's been asked. The duty of disclosure is the requirements of what information an insurer expects and what information an insured should provide the insurers with. The duty of disclosure is laid out in the Insurance Act 2015, which was a method of creating a statute to record what is expected of both parties and how contracts should be drawn up and what can be expected of both parties. It is detailed in nature, so I'm going to try and be fairly concise and simplify what is quite a technical subject. So you, a policyholder, is required to disclose all information, facts and circumstances which are relevant to the insurance in terms of what the underwriter would want to know about the risk. This should be disclosed when the policy is taken out at every renewal, and generally if there are any changes that may be material to the risk throughout the policy term. These are facts which the policyholder knows about or reasonably should have known about and which are material to the risk. Now, I've used the word material. That's quite an interesting insurance bit of jargon, but a material circumstance or fact is one which would influence the underwriter's assessment or acceptance of the risk. Give you a couple of examples. If you are a motor insurance policyholder and you get a conviction for speeding, that would be a material circumstance. That's a very simple form. That might end up with your risk requiring a higher premium, or it might result, if you get enough totting up points, that the insurer then won't insure you. So it's important to appreciate all material facts should be disclosed, certainly at inception, renewal, and when they occur. An insurance broker's process within all of this is to help gather the information and make sure that it's presented to the insurers. You can, of course, complete proposal forms, which could be in a written format or online, or there might be something called a statement of fact, which lays out the circumstances of the risk and the assumptions made by the insurers, and if you can agree to them all, the price that they quote is then acceptable. Or for more complex risks, it will be a full presentation which may include a proposal form and lots of additional information to an insurer. And during that process, things like claims, construction of buildings, CVs of directors, a whole range of material and information is required to make sure that you've complied with the requirements of the Act, that anything material in terms of facts are disclosed to the insurers so that they can price the risk properly. What classes as material information that needs to be disclosed? In other words, what do you need to disclose? Well, the Insurance Act is fairly sort of broad in terms of what it says. It's anything that is a material circumstance or information that is required by the insurers. So it should be fairly obvious to senior management what needs to be disclosed if you're going to insure a building. For example, that would be the construction of the walls, construction of the roof, what the building is used for, the materials used, if it's suffered from claims in the past, if there's any construction issues or problems with the building itself, and who the tenants are going to be and what activities they're going to carry on in the building. So anybody who is a senior manager in a business or anybody responsible for arranging insurance needs to make sure that all material circumstances are disclosed. A reasonable search is expected of anybody to make sure that material is provided and checked, and it can refer to information both inside the company but also outside. For example, if you're a building contractor, it would extend to include your subcontractors and the activities that they cover, making sure that those are included under you as principal for their activities and what you're expecting them to do. So your liability insurances would need to know more information about those subcontractors. So it's not just within your own business, it can also be outside of it. It's important that nobody misrepresents or tries to hide clear facts. Misrepresentation would lead to a problem in the event of a claim if it's not clear and the underwriter has failed to be presented with the true facts. So everything needs to be presented in a reasonably clear and accessible manner when making disclosures to insurers. The question is when should disclosures be made? Clearly when a new policy is set up, that is when a lot of work is usually done on gathering information and data. But this needs to be updated at every renewal to make sure that any changes or amendments that are required by the insurers are taken into account. But also during the course of the policy, these also need to be disclosed. So to give you some examples, I've already used the conviction for a driver. That would need to be disclosed, whatever those convictions were. That could lead to an increase in premium or cost. If a company's buying new plant, it may suddenly increase the value of its plant that it's insured, and obviously they need to disclose that to make sure it's first of all insured and also pay the premium. But there are consequences if you don't disclose that sort of information. Change in use of a property, for example. If you've got a sort of normal low risk retail unit which then turns into a cafe where they have cooking and deep fat frying, that would change the nature of the fire risk at the property, and again needs to be disclosed to the insurers. And then new activities, for example in manufacturing, where perhaps a new line uses higher risk chemicals which are a potential fire hazard. It's how those are stored, and the insurers understanding the nature of that risk, and obviously pricing and making sure that they've been notified of that. That's a fairly sort of limited list, but anything that needs to be disclosed is really anything that's significant. If you're obviously changing from one tenant to the same tenant, you don't necessarily need to disclose that. But if it's changing the use, if you're purchasing anything new, you should disclose that to make sure that's insured. And if you're changing anything and the nature of the risk, clearly that needs to be disclosed. So the question is, what happens if a policyholder doesn't disclose information? What happens in the event of a claim, or in the event that those circumstances become apparent to insurers? Well, the failure to disclose is dealt with by the 2015 Insurance Act, and the remedies are set out for the failure of the duty to provide fair presentation to the insurers by the policyholder. So the insurers will want to determine whether the disclosure or the duty of disclosure was deliberate or reckless. If it was deliberate or reckless, then they can void the policy as if the cover and the contract had never happened, and cancel the policy from inception. Fairly draconian, but does happen if there is a clear and reckless and deliberate act not to disclose. But what happens if it's not reckless or deliberate and it just happens to come out that something should have been disclosed that wasn't? It becomes a bit more grey, and it depends on the circumstances. If the insurers can show that they wouldn't have taken on the risk had they known this new information, then they can still void and cancel the policy from inception and say, right, look, we wouldn't have taken this on had we known these circumstances. If they would have taken the risk on, and it can be shown they would have done, they might have taken a couple of routes. The first is that they might have offered slightly different terms. For example, they may have included a higher excess, and that can be retrospectively applied from the outset, or they might add an additional exclusion onto the policy, which again may exclude the particular claim that's coming through had the disclosure been made. So in other words, if you'd had claims for a number of claims for a particular issue which hadn't been disclosed, that might have been excluded from the policy wording. Another one is they can impose different terms, charge a higher premium, or they could reduce the claim as a result of the non-disclosure. So there are a number of different remedies, but really the first duty of any insurance broker is to make sure that clients are aware of what their duties are, which is the duty of fair presentation of the risk to avoid those problems in the first place. I thought perhaps a good example would be to give you a couple of cases from ones I've dealt with over the years where things have become a problem. So I guess the first is where you don't disclose previous convictions or claims on your motor insurance. Well, there are central databases which insurers hold, and if they investigate and they find that those haven't been disclosed, and that happens to be a situation where the policy would not have been taken out. In other words, they would consider the failure to disclose such information as fairly deliberate or reckless, and hence cancel from inception. Obviously, some policies, or all motor insurance policies, will have to have the third-party liability cover or road risks cover in place, but any damage to your own vehicle and things like that could potentially be excluded as a result of that. Another one which has happened in the past is the failure to disclose the construction of a property. And in that particular, in the case I'm thinking of, the actual construction wasn't known about because it was rendered on the outside and the underneath wasn't known what materials were used, but an assumption was made by the policyholder who disclosed that. It subsequently turned out from a claim that the construction of the property wasn't as was thought, and as a result the insurers charged an increased premium. They didn't actually reject the claim, but they did decide to charge a much higher premium and increase the policy excess under the policy, which reduced the value of a claim being made once the insurers had found out of the construction method. So that's just a couple of very brief examples, but the main thing that comes out of all of this is the duty to disclose all information fairly and in a clear and presentable manner. So how can an insurance broker help? You can obviously go direct to insurers or go online and complete forms online, but you don't generally get the advice through that process. If you contact an insurance broker, they'll normally spend some time finding out what your requirements are and set out a term of demands and needs, things that you want your insurance contract to do and cover. As a result of that, they'll know the relevant questions to ask, and that might be in a simple format of asking you a few questions over the phone through to filling in forms and gathering additional information depending on the complexity of the risk. But the insurance broker has the experience, the advice and the technical knowledge on what you should be looking for and what's available and what is the rough cost of things depending on your circumstances. It can be complex, so let the insurance broker solve those for you. And we're delighted here at Green Insurance Brokers to provide for virtually all businesses in the UK. So give us a call and we can help. Thanks.